0.65 shares. And so the share price skyrockets. And so I think that stock went up something like 1,000% in like a couple of months. And so in that example, you're saying to yourself, oh my God, this stock went up 1,000%, blah, blah, whatever. It's just market structure. Because if they took the other 95% of the stock and they put it into the market, it wouldn't have gone up 1,000%. It was just that there was a mismatch of demand for the available shares. So if you bring that example to Bitcoin, 65% of Bitcoin is not available. It's being held by long-term holders. They're not willing to sell it in the market. And so even though there's more than 19 million Bitcoin in circulation, there's really only 35% of Bitcoin that is available for trading. And so as you get this increase in demand or decrease in demand, it is exasperated or kind of exaggerated because you have such a small float compared to actually all 19 plus million Bitcoin that are kind of in circulation. And so the reason why that becomes important is as price goes up, you will see that number trend down. It actually hit 70%, I think earlier this year, and it's come down a little bit, or maybe in December of 2023. So 7 out of every 10 Bitcoin in circulation did not move in the trailing 12 months. That's an insane number. Only 3 out of 10 are available for trading. Now, as price has moved up, we've gone from 70 down to 65%. Resonating on Wall Street. It's just that in the early days, a lot of those financial institutions couldn't adopt the asset. But now they look at this data and they say, you're telling me if this asset drops 80 to 90%, these guys don't sell? They just buy more? Sign me up. How do I buy some of that? And I know this because literally Stanley Druckenmiller and Paul Tudor Jones have gone on CNBC and explicitly said that after the 2018 crash, they called each other and they had a conversation and they said something like, did you know that, 70% of the people who held Bitcoin at 20,000 are still holding it at 3,500? They said, I got to get me some of that. Let me go find the maniacs. Let me invest alongside them. That's how they got into Bitcoin. And obviously that worked out very well for them.
What do you think happened to the argument in the last couple of years that a lot of traditional finance folks would say, well, with a stock, you can buy a real asset in the real economy and you're contributing to something in the real world. But Bitcoin doesn't really have those characteristics, but that has really faded out of the narrative. Why do you think that is?
I think people are realizing with the rise of AI that the single most valuable commodity in the world is computing power. And I've said for a long time.
The thing about AI data centers and AI computer networks, they're powering, in theory, tools that we can use in our everyday life and make work easier and, all these different tools we have. But the computer network for Bitcoin, I hear what you're saying, but I also don't know what the application is other than creating these tokens or assets that the price is expected to go up.
Yeah, it's a great question. I think that Bitcoin's computational network is doing the single most important computational work in human history, which is it is protecting economic value. There is nothing else in the world that protects economic value like this. And so in a world that is littered with central banks and governments who have spending problems, who have national debts that are exploding, that are devaluing their currency, who are punishing 50+% of their populations and pushing them into poverty, and they're eating away at your economic value, they are essentially stealing from you. It's a silent tax. It's a silent theft. But if you think about, and so far so good, but let's wait another 50 years and then we'll decide, was it successful or not.
The housing comparison is crazy. The
99% reduction.
That is something I've never heard before. It makes sense. Obviously Bitcoin's price has gone up a lot.
Another way to think about this is
today's episode is brought to you by Gemini. Gemini is a fantastic platform. How do I know? Because I've used it for years. These guys get it. They right now have a special offer where they are offering all eligible new users the opportunity to earn $100 in Bitcoin. That's right, 100 big ones. They're going to give out in Bitcoin if you go and you trade $1,000 in crypto within the first 30 days of signing up. What is Gemini? Gemini builds crypto products that are simple, elegant, and secure. Tyler and Cameron Winklevoss, the billionaire Tyler and Cameron Winklevoss, founded Gemini in 2014 with a security-first mentality and ethos of asking for.
I need living expenses in my checking account. I have a savings account because I'd like to have an emergency savings fund and a little bit of extra cash. And then I've got an investment account that I like to go buy stocks or commodities or real estate or whatever. To me, what is going to happen and what is already happening is that people are going to realize I get paid my salary. They take the taxes out. I have after tax dollars. I'm going to put some money in cash into my checking account so I can pay my living expenses. I'm going to put money into my digital savings account, which is Bitcoin. It's going to do a fantastic job of protecting my purchasing power and increasing it over time. And then I also, you know what? I want intellectual stimulation. I want to make some investments as well. I don't expect people to put 100% of their savings and investing in Bitcoin. I actually think of it as it's just a savings account. Buy some, sit it in there, you're good. You still want dollars. We live in a dollar economy in the United States, right? You go buy your coffee. You're dumb if you're using Bitcoin to buy coffee in the middle of Manhattan because you're going to get taxed and you're losing out on the future appreciation of that dollar or of that Bitcoin. Grandpa's a genius. Congratulations. Anything in between, just this way you're going to get. And so that psychological change for me really allowed me to stop looking at the price. Stop worrying about, am I selling? Am I buying? Where's the price going to go? It's just cool, calm, collected mentally now. It's going to my grandkids. Let's see what happens.
So, okay, something I want to ask you before we get off the pod here. HBO released this documentary and they claimed to reveal who Satoshi was, the inventor of Bitcoin. They said it was a guy named Peter Todd. I watched the documentary. I was not that convinced that it was this guy, Peter Todd. What do you make of this? HBO's in the entertainment business, baby. Okay. And I'm sure I didn't watch the documentary. I just can read Twitter for 5 minutes and the internet sleuths quickly had all the clips up and were explaining, what they got right, what they didn't get right, etc. I don't know who Satoshi is. I don't think it's Peter Todd. Peter Todd said made the first 50 unspendable, all these like different details will tell you a lot about how they thought about the actual technology and whether it was intentional or not for it to be successful. So I don't think I'll ever get that chance, but it's an interesting thought exercise. I will say that a very well-known investor one time told me that he thinks he knows who Satoshi is. And so I was very surprised that this person had a theory. And I said, who do you think it is? And he said, well, I think it's one of 200 people. And I said, that's a lot of people. Like, how did you narrow it down to these 200 people? And this individual was involved in digital payments in the early 2000s, late 1990s. And he said, well, there was a conference that happened, I think, in Antigua. And at that conference, there was about 200 people. And it was everyone who was interested in digital money or digital payments, et cetera, and cryptography and like all these details that ended up in Bitcoin. And he says the odds that that person who created Bitcoin was not on that beach at that conference, very low. And so he's like, I think it was one of the 200 people that were there now. And so Uber, as the quintessential example, like why did Uber work in 2009, but it might not have worked in 2002? Well, it's because the iPhone was created and the iPhone had GPS in it. And so now the rider and the driver both had GPS. And so you could find each other with very granular detail. Which corner are you on? And so the second that you now have to not call and say, hey, can somebody come pick me up on the corner of whatever? Instead, you have GPS in both the rider and the driver's phone. You now can connect people and it unlocks this huge use case for something like Uber. And so the answer to why now with Uber was literally there's GPS in the iPhone. And so with Bitcoin, why now? A huge part was, well, there was proof of work. There's all these different things. But it probably took a younger person, in my mind, right, to kind of think of, hey, how do I put all these things together and try to solve, what has been a timeless computer science problem of the double spend. Well, Pomp, on that note, thank you so much for having me.
Thank you so much. We'll do it again. What's up, guys? I hope you're enjoying this episode, but I got a quick message for you. I just released my very first book. It's called How